The White House's frantic unwinding of U.S. sanctions temporarily on two adversaries last month to contain the fallout of its own war has now prompted a hard reassessment of the costs of oil sector sanctions. The waiver came as Trump tried to tame surging crude prices amid the Iran war. America's temporary sanctions relief for Russian oil, specifically for India, has already expired on Sunday, that is the 5th of April. Under this, a 30-day waiver allowed Indian refineries to receive in-transit Russian cargoes. Another general waiver for all nations will expire on the 11th of April. The U.S. relief for Iranian oil is set to expire on the 19th of April. This waiver allowed authorized sales and unloading of Iranian crude oil already in transit. America's 6-month waiver for India's stake in the Chabahar port ends on the 26th of April. While these waivers allowed for the completion of specific transactions, they did not constitute a permanent lifting of broader financial sanctions on Iran and Russia. Now, the real question is what happens after the deadlines run out? Will the expiry of those temporary relief measures push crude prices significantly higher? At the Chabahar port, India continues to engage with America to maintain the waiver. The Iranian port is crucial for India's trade to Afghanistan and Central Asia. The country has already poured in $120 million into the port's development. Indian officials have expressed hope that Washington would consider extending the waivers on oil, given that the war in West Asia continues with no end in sight. Separately, analysts say that the White House is caught in a trap of its own making if the April expiration dates arrive without lower oil prices.